Hello and welcome to the Savvy Money Show with me, your host Sean. Today we're talking about oil tanker stocks again, and I hear you saying, "Oh no, Sean, not again." But the reason is there isn't. Sorry about that. The reason is that we have invested in an area that isn't well covered on the internet, and our main source of information is YouTube, and strangers on YouTube like me who may not know what they're talking about. I did an update last night, but I've had a chance to go into it in more detail now, and it should provide some good news for anyone who holds stock in the oil tanker sector. Also provide, I'll be providing a way for you to de-risk as well if you hold on until the end. I hope you will. I know most of you don't, because that can be a bit boring, but let's see. If you find the information useful, please hit the like button. It does help with the YouTube algorithm. If you want to see more videos, please hit the subscribe button. I'm grateful to have increased my subscription base. I'm grateful for every one of them. If you want to leave any comments below regarding anything in this morning's video. Sorry, I got up at 5 o'clock to shoot this. Then please do, or if there's any particular videos you want me to focus on, please leave in the comments box. I will answer to all comments. Now on with the show. Well, we've had DHT's first quarter results on the 5th of May, and I will try and link it down below. Please don't fault me if I can't, but I will do my best to. And basically what it's saying is that the first quarter is done better than it did last quarter. There is a certain person online who isn't invested in oil tanker stocks, who has been going around complaining about oil tanker stocks from the beginning, saying why you should get out. Now, this person has a shaky history at best when it comes to picking stocks. I did a video detailing them last night. I didn't name them because I think that's bad taste, and if you see in the first quarter, they beat last year's first quarter by millions. And now we go into the next part. Sorry about that. We're going to the next part. The crash, the oil crisis, was due to the May futures. Well, May futures don't affect until May, which is now, the second quarter. And the report actually says that they won't see the benefit, the company won't see the benefit of the oil crisis until the second quarter or maybe the third quarter, purely because even though NAT's CEO said they would hire you a tanker for 6 months, if you look at some of these companies, they're now extending the contracts to 12 months, which means even if the oil crisis is over in 6 months, they still have to pay. There is another thing. If you saw a show from an oil trader on CNBC, CNN, they were talking about oil stocks and price of oil. Now, I'm sorry, I did have the link, but I lost it. What they did was they were saying how all oil traders are forecasting 800 million barrels of oil will be needed for storage. At the moment, today, they're only storing 250 million barrels of oil. The next point is we have to look at the cost of storing it. To us, it's gone from 25,000, and according to DHT, they're charging 110,000 a tanker. NAT said they were charging 62,000. Well, now, as I said in my video, when everyone was going, CIO said 62,000, let's jump from 25 to 62,000. I did my research and I said DHT will be charging 110,000 to 120,000, depending on how long you want it. And it turns out I was right. It was around 110,000. Now, if you take Suezmax and divide that by how many barrels and you pack it full, each barrel of oil, if my calculations are correct, it comes to $2.50 and if you leave a bit of room just because you want the tanker to be a bit safer, it will be $3 a barrel of oil. And if you're a oil trader and you're betting on it hitting $50 a barrel within the year, then that's going to be, for you, it's going to make financial sense. So, yeah. So for oil tanker stocks, it makes sense. For oil traders, it makes sense. The other thing is, NAT have just released their dividend. They have said that, so this is good news for all you NAT stockholders, and I know some of you have notified me saying that you own stock in NAT and you want an update on that as well. Basically, they have announced it to be 14 cents a share. Now, it's not as high as people wanted, but as I said, they will be paying off some of that debt before they pay a dividend, which is to be expected. And I think that's the right thing to do. But on the bright side, if you look at last year, they only paid 10 cents a share for the whole year. This is 14 cents for the quarter. So next quarter, you will probably be getting an even bigger dividend. And so their dividend has gone up. Their earnings will be coming out in May. They will probably be the same as DHT or around that, saying, well, we expect earnings to go up. They may have gone up a bit or not much, but even if they have, this is what it is. Until the second quarter or third quarter, it's not going to change, make it that much difference. But even if it does, this is a stock which I said It's the second quarter and third quarter where the difference is going to be. The other thing is, sorry about this, you still have, I was one of the first to report about the tankers coming from Saudi Arabia, and that's been confirmed now. You now have you also have Shell's one that's situated off of Washington. Soon America's going to be surrounded by tankers. Not just America, Europe is as well. And I mentioned about the smaller tankers, and I mentioned about how Frontline was well positioned for that. Now, no matter what one you're into, they are all good companies. I'm not bashing any of them. In my opinion, Frontline is the better one. When it was $9 a share, there was less upside, obviously, than there was with DHT. So DHT was my favourite from that, and then Frontline. But both are winning, both of them. Now, it's your decision. One way to de-risk it is to sell all and put the money into another company. You can do that. Me, I'm holding. I said I would hold for 2 quarters. The only way I wouldn't is if I 10x my money before a quarter. And after the third quarter, I would look at the share price, see if I've made enough profit from the dividend and the share price. Now, another way to de-risk it is, if you think the share price is going to go up, you can buy in an oil company like Chevron or Total have had good years. You could, of course, go for ExxonMobil, but they've already given their earnings. They've factored in the share price, factored into their share price the actual rise in performance. Now, a riskier one is BP, but it's had a good year, but it has a lot more debt, whereas the other three are backed by Trump. If this drags on and it goes on, at least they're backed by Trump. Now, I mentioned the Saudi Arabia tankers. Those 28 tankers aren't the only ones coming. They're sending more. From what I've heard, what's happening is they're selling the oil at a discount to companies over here. And I'm surprised this is one thing that Trump hasn't stepped down on, to companies in the UK, companies in America. They're selling it at a discount. And the company's going, we're hurting. We're going to take the discount because we think it's going to go up. And then the companies are saying, as long as you keep your tanker there until we need it. And they're saying, okay, which adds fuel to the fire that the Saudis and the Russians are in cahoots to try and knock out the American oil industry. That's for another video. Another company, a less well-known company, you might want to look at if you want to de-risk, is Phillips, because they're not in the exploration and drilling side, which costs most of the money, they don't have to spud a well, and Shell has spud wells. And I think Shell will come back, make money. They still pay a dividend, remember, and they will end up doing okay. But the thing is, when you spud a well, you risk damaging the well. The thing is, these companies, depending on where they are, need it above $30 to $45 just to break even. Whereas Saudi Arabia, if it's at $10, they're making a profit. Now, you have to think of a company called Phillips, purely because they refine the oil, and then they sell it on. So they have two factors. Either the company pays them to refine it, and then they give it back to the company and pay for, or they buy it off the company, they refine it, and then they sell it themselves to the consumer. And either way, this is going to be profitable for them. 800 million barrels of oil, even if you're a big company like Chevron, Exxon, Mobil, Total, and you have your own refining facilities, if there's suddenly a demand for oil, this is why the oil prices have risen, that the states are opening up, end of lockdown, the cruises have said they're going to start, they expect to start in August. No offence, they expect it to start in June, July, May. You know, you have they expect people to start driving to work. Again, they expect people to start flying across country. People aren't going to start flying across country purely because companies have paid subscription for Zoom, and they're not going to suddenly want say, oh, we've overpaid for this at a time when we should be tightening our belts. You carry on working from home, and we'll Zoom you. For those who have, I mean, if you saw that Virgin Galactic CEO, he said how they were looking at what employees they had to bring back in now that they could, purely because some of them were doing their work fine from home. And these people who decide on the video conferencing, they have to, and which video conferencer, and who say we want Zoom rather than Facebook's free one, obviously because of the security level, have to justify the cost to their superiors. Now, so my whole position is I'm holding. I'm not buying any more, as I said last night, unless it goes down a lot more. I'm not selling unless it goes up a lot more. If you want to de-risk, you can go into Phillips, which would be my number one, the refining plant. The Chevron, Total. After them, you got Exxon. After that, you got BP, and no one's mentioned, and I'm surprised, and I've mentioned it a couple of times in the past, Gazprom, and after that, Shell. But as I said, it's your money. You're the one who has to be savvy with it. So until next time, folks, look after yourself, look after your money, be savvy with it. If you want a trading platform that's free to use, that you get a share for signing up and depositing in. See the links below. So if you look for the link below, I will try and add the earnings report. Don't give me a negative comment if I can't do it. I'm just trying my best, but I'll do what I can. Goodbye.